Welcome back to my channel. This video is going to be about the 50 and the 200 moving averages and how you can use them to read charts and execute on trades. First of all, in someone can ask what an indicator is. Well, indicators are just tools you can use to examine market data and help you analyze different charts. There are many indicators anyone can use on charts, but what professional traders do is use specific indicators over a long period of time. They get used and acquainted to it, that it becomes like second nature to them, and use them to confirm their market analysis before they take a trade. So in this video, I'll show you the most basic moving average indicators you can use and see in most charts on any YouTube video or any Instagram page, so that you can be able to add it into your trading or get to know about it, and it's your choice on how you can be able to use them. So we are looking at Audi JPY. It's one of the Forex pairs anybody can trade in the market. So how the website I'm using to access my charts is called TradingView. You can just type on Google and search for TradingView. Then how to add an indicators. We'll come to FX indicators. Type in moving averages. Moving average. Yep. I'm going to add in a second one again. So how to change your moving averages to the 250. Come here, click on 50. It's going to have a different color. Come here, change the length to 200. So this is how your chart should look like when you add your moving averages onto your chart. So I'm using a dark background. You can edit your trading view in any way you want to, but I like how this chart looks like to me, and I can correspond and feel it when I'm actually trading. So the 200 moving average is usually indicates support or resistance on a particular chart. So according to the scheme of ours, the 200 moving average is the green moving average. I'll make it a bit more greener, so we can be able to see it more clearly. Let's make it white. So a 200 moving average is the white line we can see. It serves as a support slash resistance area. So as we can see from this area, price actually tried to touch the 200 moving average, but it stayed below the 200 moving average until it crossed. By the time it crossed this moving average, it became support. As you can see from this time period, from here, from here to here, the white moving average, that's the 200 moving average, acted as support. Price tried to come and touch it and break below, but it couldn't. It kept on going back up, it kept on going back up, kept on going back up until it broke the 200 moving average to start going downwards. Then it couldn't. In this period of time, the 200 moving average acted as resistance. The price refused to actually break below. Then that's what anybody, when you put it on your chart, you can go back in the past on the left side, so you can be able to see what I'm actually talking about. Remember, with experience and time of exposure, you'll be able to see all these patterns forming. You can see it right here. The 200 moving average acted as resistance in this time period. Then in this period of time, from this point to this point, the 200 movement acted as support for a while. So let's talk about the 50 moving average, which is the blue moving average. Yep, it's the blue moving average. I want to make it darker. Well, the 50 moving average, this blue line that we see moving within the price, the 50 moving average basically shows you how price is moving. Guess price is in a downtrend, up, down. It formed a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. The 50 moving average follows how price is moving in the market. And in case anybody wants to use the 50 moving average, just look at the way it's moving. It's moving up, down. Here we can see that it's actually moving in a downward trend, going up, going down, going up, going down, going up, going down. It basically just follows how price is moving, and it forms its own line according to what is being shown on the chart. So we can actually be able to see these two moving averages in all time frames you choose. This is the 1 hour time frame. This is the 4 hour time frame. So how a trader, someone might ask how he can be able to use the 200 or the 50 moving average in trading. So we already know two things so far, that the 200 moving average serves as support slash resistance, and the 50 indicates momentum in the market. Indicates, made a bit of a mistake, yeah, indicates momentum in the market. So let's get to how a person like you and I, or how I usually use the 50 or the 200 moving averages. First of all, one thing I want you to note is that when these two moving averages cross, it means a change of momentum, as I'm going to illustrate in the chart right now. So let's get this here. Let's place it around here. So let's use the daily time frame first. Let's use the daily time frame first. I'm going to play a replay from this point of view. So I can be able to show you how you can be able to use it in the real time. Let me change the settings of the 50 moving average to make it a bit smaller. So according to this, the 200 moving average is a white line, right? So the price is trying to come above it, but remember, right now it's playing as resistance. So it tries to tap it, goes below. Tries to tap it, it goes below. Now the 50 is just moving with the momentum of the market. And as we've written in the past, we say that the 200 moving average can serve as support slash resistance. The 50 indicates the momentum in the market. And when they cross, it shows it's changing, the change of momentum in the market, right? So a trader like you and I would just wait for price to try and come to the 200 moving average. As long as it tries to come to 200 moving averages and refuses to break above, that's when a trader like I or you, depending on how you analyze the market, decide to take a sell to the next support slash resistance area you can see in the market, right? So by the time it tries to touch 200 moving average, you can decide to sell from this point of view. Then we take our profit here and our stop loss above the moving average. So let's go to an example where the price is actually going to cross the 200 and the 500 moving average. Let's go full speed. So let's pause here. So price has actually tried to break over the 200 moving average. Let's see how it's going to play out and see in case it's going to cross later on. See, now price has actually crossed the 200 moving average. That means it's serving as support for now. So we're going to look at an entry and confirm that we're actually going to go in for buys in this scenario. As we can see here, the 50 and the 200 moving average have actually crossed. Remember, crossing, as we said in the past, crossing is actually an indication that price has actually changed momentum. Before it was in a downtrend. In this area, it was in a downtrend. Now the two moving averages have actually crossed, so that can indicate a change of momentum. So let's see how this plays out and look at an entry when price touches the 200 moving average. See, it's playing as support. Our moving averages have actually crossed right now. That means it is a change of momentum. So we are looking to buy this pair right now. So I would rather buy when it's at the 200 moving average or when it hits the 50 moving average. Let's see how this plays out. So it has finally hit the 200, the 50 moving average. So I know two things right now. Price has actually crossed in this area. The two moving averages have crossed. That means there's a change in momentum. The 200 moving average is acting as support. That means, and the price is above the 200 moving average. That means we are going bullish now. There's a strong bullish momentum happening in the market. So I can decide to buy. I can place my buy in this area, depending on how you analyze the market. Someone can place a buy in this area, or someone can decide to wait for the price to actually touch the 200 moving average. Let's see how this plays out. Price hasn't executed my trade yet. Good. Now price has actually touched the 200 moving area. As long as it stays above the 200 moving area, 200 moving average, I'm going to still remain. My bias is still going to remain a buy because it's a number one. It's going as long as it stays above, it's still going to go upwards. And remember, it has crossed in the past before. So let's see how this is going to play out. So we're in the trade. It's trying to cross below, but let's see how the trade is going to play out. Remember, this is trading. You don't know what's going to happen in the market. You just go for whatever is presented to you in the market. See, price is actually going above after crossing the first time, the second time. So depending on how you trade, someone can decide to take profit from this point of view where price showed some bit of resistance. Someone can decide to take profit from this area as your first take profit and hold and shift your stop loss to a place that is more comfortable according to how you trade. So price is still respecting the 200 moving average, which serves as support and resistance. Now price is starting to come below the 200 moving average. Remember, we've already shifted our stop loss our stop loss to half the kind of risk we had in the first place. So as long as it stays above the 200 moving average, we are good for the trade. So yeah, we can. Right now, it depends on how a person trades. Personally, I hate to stay long in the market. I can hold a trade for as long as I see it still fits the analysis and let it be for a while, as long as my analysis is still right and my moving averages are still moving in the right direction. So right now, it's still going. It still shows an upward trend, but at the first time it actually hit this take profit, this first resistance area, I would go out of the market and wait and see what's going to happen. For people who can hold trades longer, let's see how price moves in this area, and depending on what is in the market, to decide. Now price is below the 200 moving average. That means it's going to serve as resistance for now. Remember, we said the 200 is like support and resistance for different individuals. Oh, for for different traders, and it has crossed again. That means an indication of a sell. So I'm out of the market right now. I've already taken profit at this resistance area, and I already shifted my normal stop loss to half of it. So I've gotten profit, and I'm out of the market right now. I'll show you another small or quick example just from a normal chart and how you can be able to see it. So let's take an example from here, right? So price came and crossed the 200 moving average. It stayed above the 200 moving average. So now it's having a support slash as a support in this area, right? And remember, it had crossed in this area. It actually crossed in this area, so indication of changing of momentum. So it maintained the 200 moving average all throughout this whole phase. And when it crossed, it can be an indication for someone to actually get out of the market. And now, currently, this is the 4th of January 2022. Currently, the two moving averages are just moving sideways. So this shows consolidation for those who are trading and use moving averages as ways to execute different trades. Now, according to the daily time frame, price is just moving sideways or consolidation. But someone can decide to go to the hourly time frame and see what is happening in the hourly time frame to see same thing happen. Price respected the 200 moving average as resistance in this time period, and it was on an uptrend before. Then it tried to go sideways, but in the end it actually crossed the 50 and the 200 moving average actually crossed in this area. Then the 200 moving average acted as resistance. So that's it for this video. In case you have any questions and you want any kind of explanation, just see me up in the comment section, or I'll connect my social media, yeah, my Instagram, in the description below. In case you have any questions, let me know. By the way, there are very many indicators available in the market, but this is trading is all a subjective journey. Whatever you feel comfortable with, or whatever indicator you feel comfortable with, you can use it to execute your trades. Well, that's it for this video. In case you in case you have any kind of question or an inquiry, put it in the comment section and reach out to me on social media and hit that like and subscribe button.